everyone, welcome back and grab a seat. Today we'll be looking at one of South Africa's quietest giants. The Bidvest Group is the company we'll be looking at today. We are looking at their financial year ending June 2025, of course. So just before we dive in, I just want to remind you a little bit that I'm an independent analyst. So Bidvest doesn't know about this presentation. They didn't pay me to do this. So I'm just doing this peck how a massive organization actually makes money. And I'm not making this for you to go and buy and sell your shares, of course. We're just here to check what's happening behind Bidvest. And of course, I'm hoping that you will have fun along the way. So let's go into it. If you live in South Africa, you probably interact with them 3 times a day. Yes, I mean it, 3 times or even more without even knowing about it. They were founded back in 1988 by a gentleman called Brian Joffe. They are essentially the plumbing of the economy. They don't make flashy tech, of course. They do the everyday essential, gritty B2B stuff, which I'll talk about right now. They operate in 7 countries right now. Imagine that. But what's really interesting is their ownership. Your pension fund is probably in there too. The Public Investment Corporation holds about over 20% of stake. And then the global players like GIC and Westwood are in the mix too. It's a true public giant, this one. How do you manage 250 different businesses without losing your mind? You don't, of course. Bidvest uses a decentralized model. Think of it like it's not a slow-moving Titanic ship, but a fleet of, let's say, 250 agile speedboats. The head office in Johannesburg is tiny. They give their subsidiary managers the capital and say, run this like you own it. This creates a beautiful synergy for them. They hold defensive assets like the cleaning, bathrooms, which companies pay for even in a recession period. And they balance that with cyclical assets like moving bulk minerals, which boom when the economy booms, of course. Let's look at actual businesses. It's a wild mix. You've got Services International. This is their global hygiene and facilities management wing. They are cleaning offices in UK, Spain, and now in North America as well. The Services South Africa, everything from security guards and quality of checking or drinking water. That's now under your Services in South Africa. Then you've got Freight, moving mountains of grain and oceans of chemicals through our ports, of course. And then you've got Commercial and branded products. If your office bought a pen or a desk or even an electrical cable today, it probably came from them, you know. And then you've got Automotive. That is now the selling of cars, auctioning of cars, and insuring of cars, of course. And finally, they own 65% of Adobe Ingram. So when you get a headache from looking at all these divisions and pop a Panado, Bidvest gets paid for that too. It's everywhere. And then Bidvest strategy in 2025 was basically go big overseas and trim the fat at home, back here at home. Their biggest move was finally cracking into North America by buying a company called Citron Hygiene. It's a huge step toward building the biggest hygiene business in the world, of course. But to do that, they needed cash. So what did they do? Let's check. So they made a tough call to sell off their financial services, including Bidvest Bank. Do you remember Bidvest Bank? Yeah. So banking is incredibly capital hungry. So Bidvest realized they are better at moving boxes and cleaning facilities than they are at fighting the big banks for market share. Let's talk about the people. 134,000 employees. Just wrap your head around that. That is an entire city of people on the Bidvest payroll. Each one of them generates about 944,000 in revenue a year. Look, this is not highly efficient, but it's a positive for employment. But on the positive side, they just rolled out a massive medical insurance program for their employees, especially for the lower income earners, bringing over 100,000 people into a wellness net. That's real impact, if you ask me. Now, on the money side, how did they actually do? Let's look at that. Well, the top line looks great. I mean, revenue is up nearly 5%. But if we look a little closer to the profit margins, you will see that they actually got squeezed. Trading profit barely moved, up just 0.7%, and the net profit actually dropped by 5%. Why? Two main reasons. First, inflation meant paying more for wages and electricity, which ate into the operating margin for them. Secondly, they borrowed a lot of money at very high interest rates to go on a shopping spree for those international companies. So while they are making more money than ever at the till, the cost of running a store and paying the bank means slightly less is left over for the shareholders right now. Make sense? Yeah, I think it does. Speaking of that shopping spree, Bidvest was incredibly busy this year. They deployed 9 billion in capital. The crown jewel is the 5 billion they dropped on Citron Hygiene to get into the US and Canada. They also snapped up a couple of UK companies to beef up their healthcare hygiene footprint and bought WearCheck locally to balance the scales and to raise cash. As I mentioned, they had a bit of a garage sale. They sold Fin Global and signed the paperwork to sell Bidvest Bank to Access Bank for what? 2.8 billion rands. Look at that. Out with the banks, in with the soap dispensers, of course. Challenges, of course, it wasn't all smooth sailing for this company. Every business faces headwinds, and Bidvest had a few big ones, of course. First, the cost of debt. Interest rates were brutal for them. Management's clever fix, they structured 78% of the debt to variable rates. They are betting that global interest rates are going to drop, and when they do, Bidvest interest bill will plummet. Secondly, South Africa's rail network. We all know Transnet had its struggles, of course, in the past. When trains don't run, Bidvest freight division suffers. So what did they do? They adapted. They shifted cargo to roads and then just secured a 25-year lease to build their own massive liquid storage terminal in Richards Bay to bypass some of the bottlenecks. And finally, hackers, of course, cyber threats are up everywhere. So they rolled out a massive global IT security net called Alice. What is leadership doing to fix over the next year? Number one, kill the debt. They generated nearly 15 billion in cash from operations this year. And they are funneling that straight into paying down debt to get their leverage ratio down to 1.8 times. People aren't buying luxury cars right now. So Bidvest closed 7 underperforming dealerships and pivoted hard into multi-franchise setups, making room for those disruptive, more affordable Chinese and Indian car brands that are flooding the market right now. They are incredibly unsentimental. If it doesn't make cash, they cut it. How do we judge Bidvest? It's really hard to compare them to anyone else because nobody else does all of this under one roof. So you can't compare them to a pure trucking company or a pure retailer, but the market loves them. Today's over 30% of Bidvest earnings come outside South Africa, mostly from the defensive recession-proof hygiene contracts. When the local economy catches a cold, their international hygiene business hands them a tissue. They generated a 95% cash conversion rate this year, which is frankly ridiculous for a company with physical inventory. In short, they are a brilliantly managed, highly defensive cash machine that just bought its ticket to the American dream. And that's Bidvest in a nutshell. Thanks for joining me. Cheers.